Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, November 21st, 5:06 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. Stay the market. We're in an uptrend. You can see the trend gauge over here. We've got green arrows on market leadership. Plenty of leaders acting just fine since the O'Neill follow-through days back on November 1st and 2nd. Short term, all five of the major indexes are trending above their 21-day exponential moving average. So we've got a green arrow there. Likewise with the 50-day moving average, that's our medium-term indicator. Continue to see a mixed bag versus the long-term 200-day moving average, with large caps firmly above, small caps and mid caps struggling. Pardon me, I'm really getting a cold. So what just happened today? Index is red. No real damage to the leaders, a couple down, about 1 ATR. That's kind of typical. Some will get hit on certain days, but all in all, no significant damage. Small caps, however, continue to be extremely weak today due to oils and regional banks. Here are the final numbers. The big seven down 1/3%. Our G8, this is our 8 growth ETF composite, down 0.94. S&P 500 opened down 1/4%, closed just slightly better than that, down 0.2%. Equal weighted, pretty much in line with that, down 0.18%. NASDAQ 100 down 0.58, equal weighted, pretty much in line also. Dow down 0.2, mid caps down 0.5%. Russell 2000 by far the worst, down 1.32%. Global 60/40 stock and bond down 0.14%. In-house GROTECTION, some underperformance today by some of our bigger holdings, down 0.81%. Normal pullbacks though. One laggard that we trimmed, actually two laggards that we trimmed. We'll talk about them when we get to the tail of the tape, as well as a new position that we added. Let's go to the S&P 500. You can see, the big markets were in a tight range today, really just waiting on the reaction to NVDA earnings, which we'll discuss in a moment. S&P 500 just in a very tight range. Let's go to a 15-minute chart here, and you can see, let's draw some lines here. Here was the gap up on CPI, then the very tight action, which we finally broke above on yesterday's action, pulled back and held that 45.20 area. So tight inside day. Ideally, we continue to hold this 45.20 area. If we dip down here a little bit and then poke right back above it, everything's fine. Really wouldn't get concerned unless we started breaking below this 44.88-ish, 85 to 88-ish area, which were the correction lows during that consolidation. NASDAQ 100 a bit weaker. Here is the CPI gap up day. Here's the high. Although arguably it was just a couple of hours, you could just as easily draw the line there, and that would dictate whether or not you thought we violated that level or not. Yesterday's breakout, here's the pullback, and with a slight trend higher throughout the day. So again, really holding that breakout right on the edge of the breakout. Normal action. Let's go right to NVIDIA now after hours. Reported the recent high, the highs as of yesterday were about 505. We spiked immediately to 509, and then within 30 seconds plunged to 468. That's the algos getting their pound of flesh, seeking out all the stops, hitting them, and then we started climbing back. Didn't make a higher high, went to about 506 on the bounce, and now just tight action for the last maybe 45 minutes or so. And right now just down 1% at 494. So net just basically a big nothing, as long as you didn't get shaken out on the after hours pullback. So we're inside the body of today's candle if we stick there at 494, as today's low was 492. So we'll see what tomorrow brings. We're looking to add to this on strength, as the numbers were fantastic, a beat and a raise across the board. Let's go to the Dow now. Dow inside day, tight action, close above 35,000. Mid cap's not too bad, only down a 0.5%, sitting right on the 200-day moving average. Small caps, here's what the problem is, and again, this is banks and oils. They make up a pretty good portion, and down 1.3%, still trending above the 8 EMA. What I say about that, if you're above that, you can't really complain about anything that you own, but it sure would be nice to see a little bit of decent follow-up, get above this 180 level, and then the 200-day moving average. So that's what we'll be looking for. Let's go to the VIX. Like the market being down, the VIX was also down today, just down slightly, down 0.45%. Under that 15 level, which is what we want to see. Dollar initially gapped lower, but showed strength throughout the day, as you can see here. See the gap down in the strength, and you're going to see just the complete opposite on the gold chart. Gold initially gapping up, but closing near the lows of the day. So there's your gap up, and then it came off a bit as the dollar strengthened. But all in all, a good day for gold, up over 1%. Not a new high in this attempted leg up, but it did pull back and hold the 200-day moving average, but don't really like the action because I'm a relative strength guy. And if you look at this big blue line, it's just lagging relative to the S&P 500. On the other hand, GDX, I know that these stocks, if they get moving correctly, can do something. Gapped up today, ended up 2.5%. Going through the charts, not a lot of them are liquid, so if we played it, we would play it with either GDX or NUGT. But a bunch of the charts of the better acting ones look a lot better than the charts of the ETF. But if you play it with NUGT, you get leverage, and the odds are you're going to outperform than throwing a dart at which stock is going to outperform, because they tend to move in a pack when you're dealing with gold and silver stocks. XLV up 1.35%. Still can't get above that 22 level. Bitcoin down on the day by 2%. Let's flip to bonds now. The broad bond index, BND, up slightly. TLT up more, and this is where the volatility is that we're seeing on the end of the curve. Actually, that pulled back late in the day. I did not catch that. Let's look at a 5-minute chart here. Yeah, actually, it rallied is what I meant. It was down more, but I missed that big rally on the long end into the close, and most of that was after bonds closed at 3 p.m. Eastern time, so that'll be interesting to see if that carries over tomorrow. Here's the yield just up slightly on the 30-year, and the 10-year yield down 0.1%. All right, let's go to the tail of the tape now. You can freeze this. I'll hit the highlights. So I talked about the after hours volatility went immediately up 2%, then even more immediately down 6.3%. But right now trading at 496, so down less than 1%. Consolidation day today, after being up 14 out of the last 17 days, 15th day above the 8 EMA, 14th day above the 21 EMA. As far as sectors go, gold, and silver stocks strong today, as well as basic materials, staples, utilities, and healthcare on the downside. Oils, banks, and tech, mostly semiconductors and biotechs. That dollar changed throughout the day, so that actually ended up being, when we got a reversal and a mild close, we like to use the neutral font for that. So what do we do in-house? Sold Amazon. Jeff Bezos is selling a bunch of shares again. And Amazon was weak out of the box today. We compared it to the holding period versus the S&P 500. It's not even beating the S&P 500. Let's take a look at this really quickly. I ran a bunch of comparison charts on different time frames today, and although the chart looks fine from a relative strength standpoint, it's a big meh. And if we've got Bezos selling a lot, I would expect relative weakness. So we closed that position for a small gain. a gain, but not as much as a gain as the S&P 500. And same situation with Lilly, our second buy on Lilly. Again, nothing wrong with this chart, but from a relative strength standpoint, that's not what we look for. Relative strength is down where the stock was much lower. We like to see relative strength making a new high before price. We definitely don't want to see relative strength making a new low before price does. So we cut this to a 3% size now, and we're considering moving that other half into NVO, which has lately been acting better, but this way you cover all of the weight loss drugs. I know that Lilly has several other drugs in the pipeline, including an Alzheimer drug and no, that's VRT that I'm thinking about, but that's a better looking base as of right now. We're at the top of the range. Although again, arguably lagging mildly versus where the relative strength line should be. And we bought Tesla today. So raise a little bit of cash so that we're ready for better opportunities. You can see Tesla after 4 strong up days, a pullback right to the 21, bounce there. Note the volume patterns, the one down day lower than the 4 up days, then another up day higher than the down day, then the last 2. Today it had high volume most of the day, faded in the afternoon, but did get back above the 50-day moving average. So we'll be looking to possibly add to this because we know from history that this can strongly outperform the markets if it gets moving. Plus the sentiment around Tesla is basically terrible right now. So the bottom line, mild uptick in our adjusted beta, and the bottom line on the day, red across the board, leaders mostly fine, small caps lower though. Let's take a look at a few individual charts and then we'll wrap up. I want to show the ones that did not have a good day today. An analyst came out with a scathing report on Palantir and gave it a $5 price target, and that was enough to send Palantir down 7% on 76% above average volume, breaking below the ADMA and back into the base. Obviously, terrible one-day action. You never like seeing multiple gains given up on one day. I don't know if this guy has an axe to grind with Palantir for some reason, but until today, the volume patterns were great since it reported earnings and we're in a bull market. So this has been one that's been on our short list, but with volatility like this, we may just go on to something with that we don't wake up and worry about it being getting its butt kicked. Or at least we would take a smaller position size. Again, ideally, we want to own. Get the portfolio to just be focused in 6 to 8 of the best names with 6 to 8% position sizes as well, and then additionally half of the portfolio in leveraged ETFs for the indexes as long as they're acting fine. So that's our goal right now. We own 12 names and we're always looking to cut them and to get into the best names. So what else was down today? VRT. This is another volatile stock, maybe down waiting. This is a data center stock, maybe down waiting on the NVDA results, but down 4.3%. You got to know the ATR on the names that you hold. Another volatile one that's also data center related, SMCI, poked above 300 yesterday, back below it today. Volume below average, up slightly after hours. So those 2 names were probably waiting to see what NVIDIA said because everybody's looking at what NVIDIA's data center numbers were, and they were just fine. They handily beat. What else was down significantly today? I think those were the only ones I wanted to highlight on the downside. On the upside, strength in NET after an upgrade and outperforming all day. You can see since this gap up here a few days ago, getting up to the top of the range now. In this, we're calling it a cup base. Also strong today, bell ring brands, BRBR. This has been in the 21 over 21 list. Great reaction to earnings, up 7% on 121% above average volume. SYM, this is warehouse automation, robotic systems. Big move up on its last earnings. It was up 50% and then gave it all back and then some. Another shot at it today, up 40% on 900% average volume. So we'll see if it does a part deux of its last earnings report, or if it's going to show some strength last time. One thing to remember, this was just on its earnings report. We were just starting that first wave down. So this was a case of a good reaction to earnings stock happening right at the top of the market. You have to pay attention. That's why I love this black line above here. So we're in an uptrend now, and that may be the tailwind that the stock needs to progress higher. What else stood out from what we own? Nothing really. A couple stocks down, a couple stocks up, but all in all, some underperformers. We'll see what the reaction of NVDA tomorrow brings us. And that's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. If you're interested in becoming a client, my partner Dan Stewart is at dan@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. My interview of FinTwit interviewer extraordinaire Richard Moglen was completed last night. It'll be posted out on YouTube and to the website Thursday morning, so be on the lookout for that. No greater way to start off your holiday than to see my bright smiling face along with Richard's. We did the topsy-turvy interview. He's usually behind the microphone asking the questions. This time he was answering them, and we had a great interview. So be on the lookout for that. Remember, it's not how much you make in the market, it's how much of that you can keep. Market acting just fine since the follow-through days, going according to our rules, as long as we hold